So the first thing I want to chat to you about is how they calculate the interest on a bond and how you can use that to your advantage. So when you buy a car, for example, what happens is that they take the purchase price, they then calculate the term, and then they calculate according to the interest how much the total interest is going to be over the term of the contract. Then they add that interest to the term, which gives you a total outstanding amount, and you then pay that off over the term, the 5 years or the 4 years or whatever. So when you then settle beforehand, what they then do is they calculate how much interest you wouldn't have paid because you're paying it off sooner, and then you get that little bit of discount, which then is the difference between the total outstanding amount and the settle amount. I'm sure you've seen how that works, the settlement. The point is, what happens with that is they calculate the whole interest up front, and then you pay off the interest over the term. Now, with your bond, it works a little bit differently. So how it works on a bond is they take every single day, they calculate the interest on your bond for that day. So, for example, they'll take 365 days. So let's say you've got a R1 million bond, you've got a 10% interest rate. Let's make it a 12% interest rate, because then it's easy for me to do the calculation. So a R1 million bond at a 12% interest rate will give you exactly 12,000 Rand for the year. Jeez, I had to quickly do it in my head. 12,000 Rand interest for the year. Then what they do is they divide that interest by 365 to get the interest for the day. And then they take that daily interest and they count it with the next day they do it again. And the day after that they do it again, and the day after that they do it again. So let's say, for example, 12,000 Rand divided by 365. I don't know exactly how much it is, and I'm not going to do the calculation now. But let's say that works out to 55 Rand per day. So every day you have 55 Rands of interest on your bond. And at the end of the month, they take all the interests of every day, count it together, and then they add that to the bond as the interest for the month. Okay. So it's a daily interest rate that gets calculated and then gets added up. Okay. So it's completely different than when you buy a car. So therefore, when you go to the bank and you say, you get your statement that says this is what's outstanding on your bond, that is what's outstanding on your bond. It doesn't include interest. That is the outstanding amount on your bond. So you don't get a discount on the interest or whatever the case may be. Okay, does that make sense?
Yeah.
Okay, now how do you have that work to your benefit? So how that works is because they take whatever's outstanding on your bond for that day. If you have a way to reduce that at any given day, you will pay less interest for that day. So that's why access bonds work so well. So if you can say, let's say, for example, you have 100,000 Rand that you put into your access bond. As long as that money lies in that access bond, you won't pay interest every day that that money lies there, even if you only leave it there for 10 days. Those 10 days, you will save the interest as if you've paid off 100,000 Rand on your bond.